Hi, this is Randy Finney with Right Side of the Chart, and today is Wednesday, December 6, 2017. I wanted to do a follow-up to the semiconductor sector. First video recently posted was back on November 27th, so just a couple weeks ago, and if you haven't caught that one, I'll just rehash what's happened and where we're at now, and more importantly, where we're going from here most likely. This is a daily chart of SOXX. Put most of my focus here. I mean, there's three that I follow: XSD, SMH, and XOXX. Now, this is the same PHYLX SOX Semiconductor Index that the three-time ETFs that people like to trade, SOXL, which is a three-time long semi, and XOXS, which is a three-time short semi, that tracks this index. So if you're trading those, you want to use this chart because this holds the same basket of stocks that they do, except they use leverage. And where they come in useful. And here's my take on leverage. Not to digress too much, but if you're trading in a margin account, you might as well just trade SOX. It has most liquidity. SOXX, that is the non-leverage. Trade it long or short. You can buy three times as much on your leverage. Margin rates are so low right now. Interest is low. Because keep in mind that if you go long or short one of the three-time leverage ETFs in a margin account, it burns up three times the buying power because they account for that leverage in on your position. So, but where you do benefit from those leverage ones are in your IRA accounts where you can't short, so you can buy the SOXX when the recent move down was a good example. When you hit and run, when you see a pretty swift move down, the decay is minimal and it actually can work in your favor. If you don't know what I'm talking about, go to the FAQ section on the site on the main menu bar, and under the ETF section, I talk about decay. So this recent move down, I suspect SOXS probably did as good, possibly even better because it was a unidirectional move. That's what I talk about. Mostly it was pretty swift. There were a few kickback rallies along the way, but so far you can see since this rising wedge broke, and this is where I was. This is where I was at in the video. I guess there's the 27th right there. So we hadn't yet broke down. So that's what I was looking for. That was the sell trigger. We had resistance level here, support level. We broke support, fell sharply, smashed through that first target, hit this target here, had a little reaction there off that 170.42 level, which was horizontal price support, kickback rally. You can see we hit the secondary or primary, I should say primary uptrend line. This wedge, that was what I refer to as the secondary uptrend line. This is a more significant uptrend line, and there was a reaction there. You see a brief intraday overshoot. We snapped right back up, had a reaction off that trend line, and then moved down to hit this bull flag measured target, which I talked about in one of the recent updates right here. There was the bull flag back here. That's where that bull flag was. So that's that. Here's where we are today. We're looking at not the cleanest divergence. There's some bullish divergence forming here on the RSI. Um, some divergence there. If I drew a line, really flat line divergence, I could add a line there and show you that we had some divergence here. And so, as I posted earlier today, both within the trading room on the front page, I'm looking for a reaction here. A reaction has come in two forms, either a consolidation or a bounce. You can get both. You can consolidate for a little while, bounce. So I drew it out earlier. My preferred scenario right now is this little bounce up there, maybe back test that trend line, go back to that 170.42 level. They're both coming in around together anyway, so you have dual resistance levels there. Then another move down, maybe test that 164.88 level again. That meshes well with this. Now here's where I'm having a little bit of pause. I did reverse my trade, meaning I covered the short that I've had on the semis from up here today, reversed it to a long position, but I'm not going all in just yet, super heavy, and I'll show you why. When we go back out to the daily charts, here's the price channel on SOXX. This goes back nearly 2 years. That's defined by these the white trend lines here. And as I talked about in that last video, and I think since then I did another update that this midpoint of the channel usually acts as support or resistance, and once prices break below that midpoint from above, they most often go and visit the bottom of the channel. So that was an additional reason to hold out for a little more gains than what that first trend line on the 60-minute chart was showing us there. Either way, we're very close. Now we're not exactly on it. As I really zoom in tight, you can see there's a little bit of room to go, maybe 0.5%, 1%. And then when I look at XSD, which is the Spider Semiconductor ETF. They have a fairly well-defined trend line as well. Obviously, very similar to what we just looked at on SOXX, but this is just a different ETF with a different basket, different weightings in the semiconductors that they have. And there's about another, from where we're at right now, about another 2.5% downside. So where I'm going with this is I can see one last thrust down, but I think the risk to reward right now to remain short is no longer very favorable because I see at best before a reaction, maybe a couple percentage points down, and that may happen. It could also happen if that scenario plays out that I just showed you here. Because remember, trend lines are dynamic, meaning their values change every day because there's a slope to it. In this case, a positive slope on that daily trend line. So if we did bounce right now, if we took out this minor downtrend line, bounced up to that level here, back tested that trend line on the 60-minute chart, moved back down, and if that took a few days or a week or so to do so, then we'd probably come right in at those trend lines that I just showed you on the daily time frames for SOXX. So there it is. This is just sort of intraday stuff. But if you're an active trader, short-term trader, and you want to game this bounce, get out. Certainly go higher, but I'm still favoring more downside, and ultimately I'm favoring a break of the bottom of this channel. We had negative divergence for the first time in a while. It is possible to smash right through there. This is a very hot trade, very loaded with momentum traders. Once the momentum breaks, you can see an exit for a rush for the exits. So I'll just say this: I wouldn't be completely shocked to see this support break to, probably not today, looking at where we're at with less than an hour to go, but this week, and then start to see a waterfall type sell off. There'll be some support levels along the way. I'd tell you right here about 150, 150, but ultimately I think we work our way back down here to about the 139-ish level. And just the fact that this is the first reaction off this trend line in a while, the first tag of it, I should say, or visit. I expect at least a fleeting reaction and maybe something more, but I'm on guard to for a breakdown. I'm watching for a breakdown of this trend line, definitive breakdown, especially a daily close, and that would be a more powerful longer-term sell signal in the semis. It's not there yet. Again, could happen soon, but I favor a little bounce or some consolidation, and maybe that happens within the next week, 2 weeks. Could be days, could be weeks, but I don't think it'll be months. But we'll see. And until we get that, keep in mind the semis are in a powerful uptrend, and they're above trend. So you can't get overly bearish until this trend line goes. That's the bottom line there. All right, let's just do this to keep this video short. Let's just go over, this also plays into my analysis anytime I'm trading a sector, is I look at the top components. What I'll do is I'll drag over here from off that side of the monitor. Here's a watch list. These are all the components, I should say, not a watch list. The components within SOXX, and I have them sorted by market cap. So you have your big 800-pound gorilla of the sector, Intel, then Taiwan Semi just behind that, NVIDIA, and down the line. We'll just look at a handful, and being, if you really look at where the leaders are, that kind of gives you an idea of what the sector, what the ETF might do. So here's Intel. There's that gap. Again, I think I covered these in that video a week or so ago. There's a nice uptrend line. That uptrend line broke. You can see closely. Broke, back tested, and then impulsive move lower. However, look at this big. That's a very significant gap. That's a big fat gap. We are now testing the top of that gap. So that's support. Anytime you enter a gap from above, the top of the gap is support. If you enter the gap, and remember the semis are a very hot, volatile trade. They move fast. So this little, you can see here, yes, we did enter the gap on an intraday basis. That's not unusual, and that's also why I wouldn't jump the gun if I saw the trend line, that primary uptrend line on SOXX break today, because the semis, they can get moving quite a bit to the downside or the upside, and you get what I refer to as momentum fueled overshoots. So the fact that we broke intraday but snap back above it and are trading above it now, well, that's, in my book, that's a defense or bullish, at least a defense of that support level, let's just say. Now it may go, and I think it ultimately goes, and that gap gets backfilled. Most gaps are backfilled over time, but to be short right now, to stay short if you were short in that move, you know what, with this stock at support, You may not want to do that. In fact, that's why I'm looking to gain a little bit of a bounce here and then get back out and re-enter short when things look good. There's TSM, Taiwan Semi. That one did break. There's a nice, I mean, this is a long-term trend line. I believe this, yeah, it goes to the left of the chart there. So that trend line started all the way back here in mid 2015 on Taiwan Semi. You can see on that reaction low and go back to this chart, continues on up. So a lot of reactions on a scale 1 to 10. That's a 10 for a trend line. You can count them. You can go back in time, and you can see a lot of reactions on that trend line. So very significant. And Taiwan Semi, until recently, earlier this year, was the largest semiconductor. It had overtaken Intel in market cap. Right now, it's fallen back behind, but again, it's one of the biggest ones out there, and now it's broken trend. It's broken a 2.5+ year trend line, and you can see we tried to grab support there. There were a few of those intraday momentum overshoots, and that looks like flagging type action. If you look at it there, we had the consolidation on that trend line, and we've since broke down. That's bearish. So, the possibility is there since that is a bear flag breakdown. You see this is a flagpole, the move leading down, an impulsive move leading down, some sideways consolidation that takes the form of a flag. And then you take the flagpole, add it to the top of the flag just before the breakdown, and that would project right around to my next target there, which is 36.92. The projects a little farther, but I would most certainly on TSM cover just above that 36.92. I always look at support levels, and flag is just a rough estimate of where it might go. If the flag lines up with support, great, but if it overshoots it a little bit like this, that would be my preferred target. So something to watch. If the bottom does fall out of the semis here, it could crack through there and keep going down. Any long trade here isn't going to pan out. But remember, as of now, you can see support 38.43. I've had this line here for quite a while. This is a decent support level, or I may have just added that line recently. I might have done that recently. Stand corrected there. But either way, I did so because we had a reaction high here. We had some reactions here, and that's where we're at right now. So there's two stocks at support, given that it is under trendline support, and that is significant. And we're probably going to close, unless this thing has a heck of a snapback rally this week, and it's possible we could close back above there. It's only about 2.5%. I mean, Taiwan Semi could do that in a day, in a good day, but as of now, we're below trend, but at support. There's Nvidia. This is a big one too. Big divergences. I mean, there's going to be a lot more downside coming on this stock, I believe. It's probably through the rest of this year and into 2018. But as of now, it's dropped quite a bit off the highs. It's fallen already about 17, 18% off the highs. You can see the nice, clean, bearish rising wedge pattern, impulsive breakdown. Had a little reaction on that first support. So this one's in no man's land. If we really zoom in, you know what, there's a gap right there. That was that island, what looked like an island cluster top. A couple gaps right there. You could add a minor support level in here most certainly, but I think this is the next significant support level here, about 174. Broadcom, and I won't go through these all, just go through a few of them. There's a long-term trend line there. Actually, go all the way back. Wow, let's go back to a weekly chart. There it is. Okay, so here's Broadcom, and I had to zoom out to a weekly chart. So this shows you the bull market uptrend since early 2013. And there's that trend line. There's your divergent high. And this one's just been diverging like a lot of these semis. Recently poised to make a bearish cross on the PPO. And you can see this divergence even steepening here on the RSI. So that one hasn't cracked yet. And this is the point of this video too. In fact, it bounced off. If you really zoom in close, we can try to tighten those lines up a little bit. Still want to capture those two reactions. I'll leave it like I had it, give or take. That's the trend line, and we bounced off support today. So there's another reason why you just at this point, I know everyone's probably wanting to get bearish on the semis now. I thought the time to get bearish on them was a couple weeks ago, and right now I think is a time to temper that bearishness and at least wait for some of these key levels to go. These are key support levels on these leading semiconductor stocks. There's Qualcomm. Like I said, any upside there was very limited when I did the video, and that was a case, fell back down, but at support. Here's a trend line again. This one's been there a while. You can see a lot of reactions. So there's my point, guys, is the semi ETFs themselves are at support or very near support, and a lot of these leading names in the semiconductor sector. This is Texas Instruments. They just broke down, and if you look here, you could add a support level. You can see a lot of reactions. It was trending here and started moving sideways, so it's been bouncing around this level here, roughly 95.30. So there it is. So that's my best guess is a a bounce here over the next few days, relatively small bounce. And if that doesn't pan out and we go back down, I'm planning to stick with that long position and see if those trend lines hold, because again, we're right at or above the those trend lines on the major semiconductor ETFs. So I'll give it a little bit of room, and if we have a big meltdown, things just keep going. It looks like we're going to have especially a solid daily close or two daily closes below those trend lines, and that might be time to reel in that this bounce trade that I'm doing right now. And it's unofficial trades, because this is such a quick trade. Trying to game these short-term bounces, I could be out of here, today, tomorrow morning, tomorrow afternoon, and then back short again possibly. So very active trading stuff that most people don't really have the time or inclination for. There's the next target, by the way. If we do go back down, if SOXX fails to break out or bounce here, that 158.89, and I believe I mentioned these target levels in the trading room recently for anybody that was short SOXX and wanted to, if you were short here, I can tell you this. Let me talk also as a longer term swing trader. If you're swing trading and you shorted, that was a good entry that you had there, and you want to hold tight, set your stops there. At this point, I don't foresee a bounce going back up there, so you can position for what I call a potential runner trade. A runner being you short it up here near the highs, set a stop, either to assure break even or maybe assure a small profit, a small loss. That's up to you, depending where you want to set it, and hold off for a break of this trend line, because again, from here, your downside potential to that first target is about another 9%, and down here is about 16%. Of course, it's going to be more than that in the leveraged ETFs. But again, if it's a slow grind down, and I don't expect it to be, this sector has a lot of air. I think once the momentum shifts, it'll be pretty quick. If that is the case, as long as it's not a slow sideways or back and forth grind to get down there, those three-time leverage ETFs, that decay should be minimal, maybe even non-existent, depending on how quick they drop. But right now, yeah, I don't see I just don't think the risk of a big meltdown here is there yet. But we'll see. The markets are dynamic, and so is my analysis. So let's just see what happens in the next few days. All right, I think I covered everything, and if I missed anything, I'll follow up in the comment section below this post. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.